Good morning, everybody. Markets are up. See if they can maintain this move out of this grind. This review of what's been happening. So tech, NASDAQ has been leading. Tech and communication services have been the two sectors, and primarily being driven by those big cap stocks. And this continuation move and this little consolidation up here. Remember that nasty reversal last week that was negated, and now prices are they're right at that pivot high. You can see the cursor right on the pivot high on the daily time frame. And with this little consolidation right here, that little consolidation there, sideways price action, it's right there. Today's got to keep going. I mean, that's the bottom line. Today's got to keep going. It's right there knocking on the door. And can it move up to the prior pivot high, which isn't that far away? Doesn't mean it's going to stop there. And it could just push up above it. And a lot of times you get that we call a greater than 100% retracement. And then things begin to stall. And as we've been looking at for the last, month and a half, sentiment has been dead neutral. And we're looking for one, it's got to get to one extreme or the other before we get an indication that things have hit an extreme. So breadth hit the extreme here, and it's just been jiggling around up here in this high area, which is positive. It never pulled back to zero, which is what I was looking for. As this would have pulled back, this would have been at zero. That would historically would have been a good entry for a buy, rather than we got this consolidation. So buyers are so confident at this resistance area that it's going to keep going. We'll see if that is the case. And the day-to-day action, you can see this hourly chart, has been extremely erratic. So it's up at the top of the range here. It's kind of a messy consolidation. It does have support underneath it, which makes it critical. Right? It's not a void, meaning it's not a void where, we would say it needs to create support, and being a void, there's the potential for it to pull back relatively deeply, but it shouldn't. More so with something like this, it becomes ever more critical that it doesn't pull back very much, because now it's had 1, 2, 3, 4, 5, 6, 7, 8 days of going sideways. And now that it's begun to move up, it hasn't cleared this high. But common sense says it should keep going. And if it comes back down into here, well, you don't have to be any kind of a market guru or genius to know that something's very wrong. So you got a clear line in the sand there in the area of the 20 MA on the Qs that prices should not come back down into. So we'll see. There's this little consolidation down here, which we can mark off around 316. That should be, I don't even know that it could come down there, but that's a intraday line in the sand that it should not violate. Why is your breadth indicator showing an upward trend? Yes, well, everyone in the media is talking about how this rally is focused on 20 stocks. Well, good question, but it moved back up. So this is just like any other index, other than equally weighted, is going to be influenced by those stocks. And so, it reached this extreme. And I'm not saying that they're wrong. I mean, this is, a McClellan oscillator, and it is what it is. The stocks that it's measuring and how it reached the extreme. But so this looks at all the data. So maybe that's a better way to explain it. Advancing stocks minus declining stocks, right? Which is this piece of information right here, down at the bottom of the screen. Just the day-to-day, how many advanced versus declined. Now you take this closing price and you plot two moving averages, and a 19 exponential and a 39 exponential. And the distance between those moving averages, right, is this line. That's all it is. So when there's a spurt, right, an initial move, and you line this up here to here, and I guess on the S&Ps it was much more muted than on the Qs. And if I change that to the Qs, you probably see, from here, stronger, it went sideways, and then it hit the extreme right at the top where we got the wide range bar. So if I was to plot those two moving averages around this data, and just to explain a little further since you've opened up this conversation, the zero line is the two moving averages touching each other. Above the zero line is the 39, the 19 exponential above the 39 exponential. Down below zero, the shorter is below the longer. So what happened here, as this was trending up, the moving averages were getting further apart from each other. That's all it is. Pretty simple, breadth internal. There are others that are much more complicated, but I've used this for decades, and it works well when you combine it with sentiment. So by itself, I found it to be useful, but not accurate as far as calling a low or a high. So that's how this is created. So again, that upward trend is just the moving averages spreading apart from each other. If you were to look at advanced decline line, it's probably moving up, but over the years, I have found that to be pretty much useless as a tool. Since we're on this chart, volatility index is down here. There are plenty of reasons to recognize risk is increasing. Institutions don't care, and they will push things to an extreme, and we don't see it's at an extreme yet. And they'll get caught at the top and vice versa. And we'll see. You see interest rates starting to move up. And what I spoke about over the weekend was the fact that this has not been a good thing for the markets. This is one of the slides we went over that shows how interest rates and the dollar moving up has been bearish for the markets and vice versa. And so interest rates have been down here now for the third time, and they've started to move up. I think they're down a little bit on the day. You've got the dollar retesting this low here. It hasn't traded or closed above a prior high yet. This is a weekly chart. So this is the relationship. It is what it is. No one needs to do any analysis here to say, hey, when the 10-year was going up and the dollar was going up, the markets went down. As they begun to turn lower, which they did in October, well, Europe went up and the gold went up and the market stabilized here. And if these start turning back, especially the dollar start turning back up again, well, Europe, which has been leading our market, is going to turn down. That's just, the black and white thinking that you have to apply to this information, because that's what's happened. So if you were to overlay, euro in some FEZ, I think it's called, or even the hedged dollar, you see it bottomed out in October and it moved up last week. And if this starts to move up, you saw gold pull back. And so if this does break out above these highs and these interest rates start to go up, well, Europe's going to pull back. This is tech. This is up against the prior highs here. It's got the same consolidation that the Qs do, and they've got room to go higher. But you've got this intermarket relationship kind of lurking that hasn't, done anything yet. Here's the 2-year, right? Inverse of interest rates, and it's sitting here on this low. If these start to drop and this starts to go up, I think you need to recognize that as far as risk. Yeah, we could look at a SPY chart, of course. So going back here, always look at the spiders. What are they doing? They're up here. They're into the top of the range. So move that away. It's been consolidating at this resistance, same shallow pullback. You see the cursor there. It's into that resistance area. And oh, it's right up there, just above that pivot. So it's up into the next area there. And so looking at, again, here's this 420 area, which seems like a logical step. One of the things, just like this little low here, this weekly bar is going to become a critical level that if this is violated, you're going to see the bid getting hit. There'll be no doubt, but so far, so good. It's up at this resistance. Look, we go over this basic stuff in MT Live all the time. Right? And all this other nuances come into play, but hey, this bottom of the range, top of the range. Resistance. So far, it's holding up well. We got the volatility index down near low lows there where it's gone up. And so we have to be careful here. Buying into this move right now, to me, is foolish. Really tight stops, you could do it, but if you want to buy here and a stop under the low when resistance is right there, it doesn't make sense to me. And it's just been a mess for, look, the whole move downtrend, right? Doing nothing, mess of bars, 4 days up, next mess of bars. It's a transfer of supply, Tony, as you're asking me, because so far it's going sideways. So transfer, sometimes use the word absorbing supply, right? So this is the supply, the word for resistance. It's going sideways. So buyers' demand are absorbing that demand, and we get a red bar ignored and a power reversal. And so this becomes a very important reference point not to be violated. And we've had 2 days of consolidation at the top of the bar. It's moving up here. And just follow bar by bar. Even when we say, this is a very important point not to violate, this 2-bar reversal, it shouldn't even come down there. And so far, it's not. Now, put an alert under yesterday's low, which is this little area right here. And unless it goes down below that, you assume it's going to keep going up. Up to where? Well, this high here is just below 420. That was not rocket science. And in intraday, 5-minute chart so far looks good. We'll look at the futures, a little breakout failure initially there, but that's really not such a big deal. But a little bit of weakness for the moment. Why? It's reaching the top of the range. So am I going to buy into something that is going into the top of the range? Hell no. This is where, this was overnight, but this is where you're thinking about pulling back towards support. Buying. This is the way this market's been. Buying strength, right? So in a bull market, you can buy strength, right? You can, of course, use big stops, but in this market, it's been more about buying terrible, not terrible, but ugly weakness. And then it comes back from that. But overall, it's just grinding its way. Look at the size of these bars there on the weekly chart. All right, so SPX. It's got 4180. So Jake's not interested in the upper side. I wrote down 40, above 4,200. There was juice. Now maybe it's backing off at 4205. They zeroed it out on TC there, but 4205. I'm always looking to fade these moves, but it is coming out of consolidation. 4130. I don't, if it's got juice down there, I had that too. You can see how things have gotten relatively close because the ranges have tightened up quite a bit. Whereas not too long ago, when they make big moves like that, the premiums get jacked and you got more of those no-brainer setups. But 41, 4180 at the upside. I'd like to see if it goes up, Jake, to get above 42.05. For me, that would be a no-brainer. And 4130, I wouldn't do that. Anyway, this has gotten more difficult. You were spot on with what you had said about 25 points yesterday, by the way, Jake. It's just an inside day doing absolutely nothing. Anyway, pretty much the same. I don't want to take too much time. We got into this conversation, but markets are at resistance. This has been the laggard. We'll see if it can get through it. The Dow got pulled back today on the Goldman Sachs earnings. That pulled it back from where it was. And this has actually been leading. Look at the way that went up versus anything else. You can see the spurt of that move. And money's been rotating from tech to the beaten down healthcare stocks and McDonald's, the defensive stocks. And so things are up at resistance here. And that's it. We looked at the VIX. We always look at the transports. Doing nothing there. And crude oil just hanging up at the 200 MA for the moment. So we'll see what that does. All yours, Dan.
Good morning. Yeah, the market strength continues here, as I've been saying the last couple of days and weeks, actually. It's like, I think it's just the same story of the market is calling the Fed's bluff, peak inflation, peak everything, and it's time to party. Because this is, Greg just went over it all, but I mean, look at this monthly. It's an inverse head and shoulders. So, even if we're not trading those exact markets, we've been finding great setups individually. So all our opens are okay. We're actually, one alarm went off here on the video, gapped up. We're long puts on this. So just keep the stop on that. Couple earnings here, JB Hunt. I did not get filled on my put spread. We were trying to sell the $5 wide 165. If you did get filled, despite this gap down, there's 98% chance you're going to have an open gain because you still got $8 of comfort. And it's, gapping right here. In fact, 30-minute high, it looks like a new put opportunity. Maybe we roll it higher, the 170s. ELS, no pattern. I can't see any gap, but it's a bottoming pattern. I'll set an alarm at 55.30. If it gets up there, it could be a bottoming pattern. Goldman was up into earnings. Another bottoming pattern here, light volume. I don't see any prints. J&J. Now this is bullish consolidation after a climactic sell setup. It's whipping all over the place today here. So nothing to do with it. BAC was a nice bottoming pattern. Nice. Today's Tuesday, so last Friday had a beautiful gap from a bottoming pattern. LMT. We were talking about doing a put spread on this also. I think, I forget, it might have been too spready or something, but that's gapping up, looks higher. 497, so let's watch that on a pullback. Daily, weekly, monthly look good. Goldman was up pre-market, gapping down here, 330. So that's a Bear Island reversal right there. gapping under there, island reversals, you need air on the left and the right. Air meaning no prints, no tails or bodies or anything. So that's a bear island reversal. Let's watch that trade call spread. PLD, that's sloppy. I'm going to delete you. 30-minute high though could be a put spread. Now BK, I don't know what got this thing in such a pissy mood yesterday, the day before earnings, because earnings were actually pre-market here. I just don't know if it was hey, Greg, Robert just sent an email about the opening trade spreadsheet, if you don't mind looking at it.
Okay.
Yeah, I sent a text to you all. I was cleaning out Gmail files, freeing up space last night, and I inadvertently deleted the open and close spreadsheet. So our developers trying to get it back for us somewhere. So sorry about that. We'll just recreate it with the open positions if need be. All right, so nothing to do here. Eric, gapping down 5. That's a big gap. I don't look at the price. It's down 30 cents or $30. I look at a picture. I mean, that's a big gap. But now it's in a monster range. So I have no idea what this thing's going to do. We'll come back to it. CBSH, another regional bank. I don't see any prints. We'll come back. CME. Alex found for us yesterday. Beautiful buy setup, minor support. That's what when we teach these patterns, like in MT Live, we say we're talking to little Johnny. Little Johnny, we got an uptrend, higher pivot highs, higher pivot lows. We're looking for a retracement and pictures of reversal on minor support, which are prior highs. And we got rising 20, rising 50. And there's my pictures of reversal and support. So that looks fantastic as a directional and put spread. CSIQ, Sam IAM sent this to me. This would be a great put spread under yesterday's low. A couple fizzlers on my list. This would be a great 1, 2, 3. Number of the TAN stocks did well yesterday. ENPH was another, but that thing took off. Thomas V, too far from the 20 for me. LEV, igniting bar, it's climactic on the 15. You need a pullback. Jose, asking about. Okay, yeah. That's why I personally don't like swing trading. Now, this definitely is an intraday void, but I like them when they come down in a controlled manner. But you got a beautiful 180 reversal on major support. You got a 15-minute bullish uptrend on the 15. So yeah, for a day trade, I like it a lot. And you just got to figure out your trail methodology. MDT, yeah, it's a 180 closing breakout. Put that on the list. I like that one better. It's just my style. Just because it's a closing breakout, you got 2 red bars ignored at resistance, and the target, like 83.50 area. A little extended on 15, and we got a market gap up, so I'm in no rush to get into anything. Amazon, yeah, I like that too, Thomas. It's right here at resistance, but it's bullish gap. This could be an ideal 30-minute high. Let's see what it does here. Expedia, we entered a 3rd lot yesterday. I see that gapping up. That looks great. So Fizzler, as Greg was talking, I just saw this thing going by the ticker, WANT. It's an ETF, but bullish. Wow. All right, so this is not nearly as bullish as many other ETFs, But this could be the home run entry on daily, weekly, monthly. We got a 180 reversal on major support. We got a 180 on the daily. We have a small little bull flag on the weekly. So yeah, that looks great. Alex mentioned MGK as an alternative to spiders. Yeah, it looks fine. INVA was a 1, 2, 3 on my list, but gaps messing it up. Coin, I think I read that they're thinking of moving offshore to try to get away from a little bit of the US regulators. FINRA, they're getting tired of, and the SEC, I'm sure, has been at their doorstep all over, Bitcoin related things. So the market's interpreting that as bullish. And I mean, this is on my core watch list. And a core watch list could mean it might take 6 months to set up, or it might not, and I delete it. But this broke out and it's bobbling around in a trading range. And look at the monthly. That's a W bottom, new low plus. So that's why it's on my core watch list. Let me put that back in another window over here. Now I know Hood is not directly related, but this is the Robinhood. Yeah, I got its sea legs back after a big move. UNG, natural gas, I was watching yesterday. A gap from a double bottom. I'm watching this to sell naked puts on. Yeah, that's fine. Ideally, Thomas, he'll go sideways here at yesterday's high, and then an hour, 30-minute high would be ideal. ELS. This was earnings too. I got nothing. FPK, light volume, nothing. All right, I see KKR. I posted as a long. My alarm just went off. And DHI, we shorted puts yesterday. My alarm just went off. Up alarm. So I'm just going to raise the alarm is all. And we can tighten the stop. I'll do it. We're still in BT. Alarm went off. So DHI is fine. This one we did as an earnings trade. DHI earnings surge or on Thursday, I think. PNFP alarm. This was is this earnings? PNFP? Yeah, this is earnings, potential bottoming pattern. So let's watch this PNFP. That could be, I'm not touching it now, but let's give it 10, 15 minutes. Heddle's asking about NVIDIA. Heddle, I would not touch it. I wouldn't do anything with it. It's in a strong uptrend. It's range bound. It was a failed 1, 2, 3. It's gap into resistance. So I just wouldn't do anything with it right now. All right, so Goldman here. That's a nasty Bear Island reversal, as I said. H. Oh yeah. H. Shoot, I forgot to post this. I said yesterday you could buy over yesterday's high today. So that looks fantastic, but I'm gonna see if we can get a gap fill. My H alarm just went off, Alex, 115. Shoots. This is a beautiful pattern. That's just, I love it. We talked about it in detail yesterday. All right, I just sent it to Telegram so they can keep an eye on it. All right, KKR. Yeah, so it gapped over our entry, so our rules say 5-minute high. Unless we veto it. Or we can look to buy on a pullback. So. You know what, I'm gonna say hold off and we'll just monitor it for better entry. Oh, Amazon. Yeah, pull back, you know, it's up a lot of bars at the prior high, so I don't like it right here. Monster, he just trades sloppy to me, Sam. It's for me, it's more of a put spread under last week's low. Why am I watching this stock? DBX, that was yours, Sam. I am. It's a grinder. Nice gap from a 15. There's our triple K pizza. Bottoming pattern. Put spread watch. Kerbal. Hey Greg, you know what? You know what? McGraw texted me last night. He said that